Okay, now obviously it's a big day for Cognizant. You've just put out your first quarter results, but I noticed that the market has reacted a little bit negatively, well, one could say that, to to your revenue outlook for this year. Kind of what should investors be thinking about that?
Sure. James, it's an interesting quarter. We actually had a really good Q1. We grew almost 3% sequentially, 25% year over year. We exceeded our revenue guidance. We grew faster than our peers in the industry. However, we did reduce our full year 2012 revenue guidance from at least 23% to at least 20%. Now let's put that in perspective. We're still going to grow at least 20%, which is far above the peer group, far above what the industry is expecting to grow, and by any measure from any other industry, extremely healthy growth. But it is less than we originally anticipated. In Q2, the quarter we're now in, we expect to have healthy growth by any normal metric, over 4.5% growth sequentially, which is well above what others are forecasting, but it's not as strong as we would have originally had hoped.
What you're saying is, the sense I'm getting is that investors should keep the faith with Cognizant. Is that what you're saying?
We certainly believe so. The issue for us is the rate of acceleration in growth is not as strong as we expected. But let me be clear, growth is accelerating. It's just not accelerating as fast as we would have hoped.
Why is that? What's driven that?
It's a phenomenon we saw in coming out of March and into April, which is normally the time when we see growth really pick up. And in the discretionary part of the business, particularly in financial services and life sciences, people are increasing their spend on discretionary work, but they're not increasing it as fast as we would anticipate. Right. And we can talk about why, but it obviously comes down to the regulatory environment, cost pressures, and people being cautious, particularly in those industries.
And what does the competitive landscape look like to you? Are we talking about share gains or share losses here? Because you're up in there against some big companies like IBM and Accenture.
Sure. Let me be very clear. With our revised guidance, we are continuing to take market share. We are growing faster than any other major player in the market with at least 20% growth, which by definition means we are taking market share. The issue is we're not growing as much faster as we would have anticipated. But even in the sectors today that we discussed were soft, financial services and life sciences. Both those sectors are growing this year. Right. Both those sectors are growing double digit this year, but they're not growing as fast as we had originally anticipated, but we are clearly continuing to take market share.
Okay, great. And Karen, just a quick question. Kind of what are the big trends that you're seeing at the moment in terms of, customer buying? Obviously, there is revenue growth here. Kind of what type of things are customers spending their money on when it comes to business process outsourcing?
We see a lot of traction across all of our industry segments, particularly in the life sciences space, for example, where we do a lot of clinical data management, commercial operations. In financial services, we're seeing a lot of trend towards business process outsourcing, particularly in the insurance space. We have customers interested in outsourcing a lot of their different back office functions and things that maybe they wouldn't have explored 2 or 3 years ago. Right. Customers are now coming to us and asking us to work with them on how to explore different offerings within their back office.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to